Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. In today's podcast, we're going to be talking about a new type of standard that the Big Four accounting firms are going to be auditing and consulting their clients on. And that's something called ESG standards, also known as environmental, social, and governance standards. Now, we were going over some of the year-end reports yesterday when we were talking about whether the Big Four are hiring. And I said I wanted to go over some global initiatives that I thought the Big Four accounting firms were going to get involved in. And I thought there was going to be something around this, but I didn't think it would come this soon. Because in E&Y's report, I saw them speaking a lot about the UN and a lot of these world government type of institutions. And I'm like, I know what's going to happen here because as I've spoken about on this podcast before, during the COVID-19 pandemic, governments are getting more and more power, and I'm like, this is the Big Four accounting firms are going to get involved here. And little did I know, something had already happened. And what happened is that leaders of the Big Four accounting firms, PwC, Deloitte, E&Y, and KPMG, announced that there's some new ESG criteria and metrics, and these criteria are going to involve things like measuring greenhouse gases and diversity in the boardroom. And this doesn't amaze me at all because of all the things that are happening around the world, and governments are taking advantage of it. The UN is spreading more and more all over the globe, and the Big Four accounting firms are deeply embedded in global companies. So they can help these government institutions gain more power and push the initiatives. And I knew that was going to take place, and it already has here with this new initiative. And they took these ESG standards from the UN, and the UN first mentioned them in 2006. And this ESG stuff has been getting popular, but I guess with all this social justice stuff that's going on right now, the people that are pushing ESG just pushed it that much harder, and now the Big Four accounting firms got involved. And I'm sure the Big Four accounting firms can be influenced for so many reasons. They jump on bandwagons all the time, but also you have to remember they're facing a lot of regulatory scrutiny all over the world for audits and stuff. And so if they want to work in certain countries, then I'm sure they have to adopt these standards. And they are in danger of getting kicked out of countries like South Africa and other countries because those countries realize what they do. And even some of those countries, they call them a cartel. I'm sure to operate in a certain amount of countries, they have to adopt these standards. But the CEO of E&Y had the following to say: "The time is now for companies to broaden their engagement with stakeholders. The combined impacts of climate change, COVID-19, and economic inequality contribute to the urgency for businesses to embrace the long-term sustainable value creation and prioritize the needs of people and planet and the creation of broad-based economic prosperity." It is also reported that the World Economic Forum and the International Business Council partnered with Big Four to make this happen. And no shock here, the Bank of America CEO is in charge of the International Business Council. So you see, again, the Big Four try to make it seem in that quote that they're the good guys, but all they're doing is partnering with their clients and working with their clients' initiatives to have a better relationship with their clients and in the business community. They're not doing this out of their own volition and out of their own hearts. They're doing this because their clients and the largest banks in the world and the largest world governments are telling them to. And Bill Thomas, who is the head of KPMG Global, had the following to say: "Reporting on ESG factors like carbon emissions and human rights and other key metrics will not only help inform investors while helping companies control their full corporate value, it has the power to realign capitalism for the benefit of broader society." End quote. And this stuff is becoming more and more popular around the world. We've covered it in previous podcasts about mandatory reports that are required in Australia for human trafficking and human enslavement. And I remember when I first read that for Australia, I'm like, what the heck is this human slave reporting they have to do? And little did I know that it's not something weird. It's something that's mandatory now, and it's getting pushed across the globe. And the Big Four in Australia, when they report that, they have to report it themselves, along with other regular companies. But again, the social justice stuff, the Big Four aren't doing this because they're super awesome and really happy to do it, and they're trying to help out. Big Four see this social justice stuff as a way to make money during a downturn in the economy. You gotta think they're losing clients, but they don't care about society as much or making a social impact. They see a way to make money from a crisis. There's a lot of people pushing for social justice around the world right now, and the Big Four see this as a way to make money off of that. And if the Big Four did care so much about human rights, then why did they cut the pay of their employees and the retirement benefits of employees? Shouldn't they care about employees' rights? Well, not really. And then also, why do they lay people off around the world? Aren't those basic human rights that they should care about? And shouldn't they financially stabilize themselves enough to maintain employee rights, especially in years where they're all had positive growth rates? And also, if they care about the globe so much, why do they continue to screw up their audits around the world and cost investors tens of billions of dollars? Like we just spoke about that autonomy audit they did in the UK where HP had to write off $8 billion. If they really want to help the world out, they should just need to improve their ethics in their auditing, and they'll save investors and employees billions of dollars around the world. The Big Four, you have to remember, are always in favor of more regulation over financial statements because it means more work for them. The more work their clients have to do on the financial statements, the more disclosures, the more economically beneficial it is to the Big Four. Additionally, this type of audit work sounds super subjective. How can you tell what someone has really done regarding diversity or pollution? They're going to disclose a number and it's going to be hard to audit. No one is actually going to do a ton of work on this, especially in the initial stages. And if they do, no one is going to give them a material misstatement if they do something wrong. And what is the implementation plan for this? Nobody knows. And it appears that the Sustainability Accounting Standard Board will be the board that maintains the standards in this area. The Big Four won't only audit these disclosures, they're also going to offer their clients consulting. And especially in this first few years, they're probably going to be preparing it for a lot of their clients. And they won't prepare for their audit clients, obviously, but they'll prepare for their non-audit clients. What are other companies doing in this area? Well, BlackRock, which is a large investment firm, has launched a suite of ESG ETFs in this area. And I'm sure these ETFs will just hold the largest companies in the world like Apple and Amazon. They're not going to reinvent the wheel here. They're just going to hold stocks and bonds and just allocate differently among those. See, everybody's taking advantage of this and trying to turn a dollar off of it. They see all the people talking about social justice on the news, social media, and everybody's thinking of a way to make a dollar on it. And the Big Four's way is to add disclosures in the financial statements and then audit those disclosures. And the reason they're making press releases about this is because they want to let companies know, and they want to let the general public know that you can hold companies accountable by making them disclose more. So that's the update for today. Make sure to subscribe to this podcast, subscribe to our YouTube channel, and support us through the Buy Me a Coffee link if you can. Thanks for listening.